Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in corporate filings, and today we're unraveling a report that has got some interesting numbers coming out from Regions Financial Corporation that tell a tale about the end of 2025. Get ready, because we're diving into what Regions Financial Corporation announced about their performance, and it is not just about numbers, it is about what those numbers mean for their future. And hey, before we get too deep, if you love getting these kinds of straightforward financial breakdowns, make sure you hit that subscribe button. Also, we're building a fantastic community over on Discord. So if you want to chat with other finance enthusiasts and get more insights, the link is in the description below. So on the 16th of January 2026, Regions Financial Corporation put out some news about how they did in the last quarter and the whole year of 2025. They are giving us a peek at their preliminary results, which means these are the numbers they think they'll end up with, and they are sharing some extra financial details too. This is like getting the early draft of a report card. Now, let's talk about what they are registered to trade on the stock market. They have their common stock with a par value of 1 cent, trading under the ticker symbol RF on the New York Stock Exchange. They also have several types of preferred stock, like their Series C, Series F, all trading on the New York Stock Exchange as well. Under tickers like RFPRC and RFPRE, these are essentially different classes of stock that have specific rights and sometimes pay different dividends. The main event here is the announcement of their preliminary results for the quarter and the full year ending the 31st of December 2025. They are essentially saying, here is how we think we did, and providing supporting documents for that. This is important because it can affect how investors see the company and its stock. Beyond just releasing numbers, Regions also hosted a webcast with their executives to discuss these preliminary results. This is a way for them to directly communicate with investors and answer questions. They've also attached a presentation that was part of this review. Think of it as a live Q&A session for shareholders. It is all about transparency, making sure everyone has the same information at the same time. So what is in this press release? The first exhibit, it's your appetizer for the financial feast. It gives you the high-level overview of their performance. For a company like Regions Financial, which is a pretty big player in the banking world, the first thing you'd want to look at is their net interest income, which is the money they make from loans, minus the interest they pay on deposits. This second exhibit is where we get more of the nitty-gritty details. This is where you'd find things like their earnings per S-share, which is a key metric showing how much profit is allocated to each outstanding share of common stock. If earnings per S-share are going up, that is usually a good sign for shareholders. A significant jump could mean increased profitability or a reduction in the number of shares outstanding, perhaps through buybacks. The visual presentation is your cheat sheet. It's designed to make the complex financial data easier to digest. You can expect charts and graphs here highlighting the most important trends and figures. They probably walk through key performance indicators and maybe even give some color on their strategic priorities for the coming year based on these results. When we look at a financial report like this, especially from a bank, we want to see how well they are managing their money. For Regions Financial, a critical number to examine would be their loan portfolio. Are their loans growing? Are people paying them back? Looking at something like total loans, and then breaking that down by type, like commercial or consumer loans would be very telling. If loan growth is strong and defaults are low, that is a sign of a healthy business, both for the bank and for the economy it serves. Another crucial area for any bank is its deposit base. How much money are people trusting them with? Wednesday look at total deposits and see if that number is climbing. A growing deposit base means more capital for the bank to lend out, and it shows customer confidence. If deposits are shrinking, it could indicate customers are moving their money elsewhere, perhaps to competitors or different investment vehicles, which could signal headwinds for the bank. Now, let's talk about profitability. Beyond revenue, we always want to see the bottom line. For Regions, we'd be keenly interested in their net interest income, and then ultimately their net income. If net income is significantly up compared to the previous year, it suggests they are either bringing in more money or managing their expenses more effectively. A 10 or 20% increase in net income is great, but if it's a tiny fraction of a percent, it might not be as inspiring. We also need to consider their efficiency. Banks have a lot of overhead. A key metric here is the efficiency ratio, which is basically operating expenses divided by operating revenue. A lower efficiency ratio is better, meaning the company is getting more revenue for every dollar it spends. If Regions shows a declining efficiency ratio, it means they are becoming leaner and more effective at operation. If it is increasing, they might be spending too much. Overall, these preliminary results from Regions Financial Corporation give us a snapshot of their financial health as they enter 2026. The numbers released in their press release and supplemental information are the bread and butter for investors. They paint a picture of how the bank's core operations, like lending and taking deposits, are performing, and critically, how profitable those operations are. Looking at these results more broadly, Regions Financial appears to be navigating the financial landscape cautiously. Their ability to grow their loan book while maintaining low delinquency rates would be a sign of strength, indicating they are lending wisely. Similarly, a growing deposit base reflects customer trust and provides them with ample funds for future expansion or to weather any economic storms. The efficiency ratio is a good check on their operational discipline, ensuring they are not merely growing for growth's sake but doing so profitably. It's these fundamental checks that reveal the true health of a financial institution beyond just the headline numbers. Now, what are the potential risks and opportunities for Regions? On the opportunity side, if they've successfully managed their interest rate exposure, they could benefit from favourable market conditions, growing their net interest income. They might also be looking at expanding their services or reaching new customer segments. On the risk side, a significant increase in loan defaults, especially in a potentially volatile economic climate, could hurt their profitability. Regulatory changes or increased competition from fintech companies are also present concerns for legacy financial institutions. My take on this filing is that it is a crucial update on Regions' performance heading into 2026. While we don't have the final audited numbers yet, these preliminary results, especially if they show strong growth in key areas like net interest income and a manageable efficiency ratio, suggest a company that is likely on a stable course. The key will be to watch how these numbers hold up in the final reports and how they fare against their peers. If their loan growth is outpacing industry averages and their efficiency is improving, that's a very positive signal for their strategic direction. Alright, that is our breakdown of Regions Financial Corporation's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.